Thank you so much for joining. In this video, we are going to discuss the common size approach for cash flow statements, in particular the inflow and outflow approach. What does it mean? Common size, it's a good way to analyze different cash flow statements over periods of time or to compare cash flow statements of different companies with each other. Because what it means, and I have done two videos, one for income statements and one for balance sheet, is that every line item is expressed as percentage. So you don't have those absolute numbers that you can't really compare across industries, across companies. Everything is expressed as percentage, so you know exactly which line item, which cash item provides most money or takes out most of your money. For cash flow statements, there are two different approaches. The first approach, that's what we are going here today, is called inflow-outflow approach, because every line item of cash inflow is expressed as percentage of total inflow, and every line item of cash outflow is expressed as percentage of total outflow. The other alternative is to express each line item as percentage of net revenue, which I will explain in another video. So how do we get there? First, let's assume we have an income statement. I have used the direct format here. As you know, there are only direct and indirect formats for the cash flow statement for operating activities. So cash flow from operating activities can be expressed in the direct format or in the indirect format. CFI and CFF are always expressed in the direct way. Yeah. So what we are going to do is we use the common size approach, inflow-outflow approach for this format, and also if CFO would have been expressed as an indirect format. So as always, what are you going to do? You look at the two inflow items, which is this one and this one. And what you do, you basically write them down again. I don't do this now to save some time. So you write this down. You write cash received from customer, cash received from sale of equipment. So you have those two items here. This is your inflow section. That's where you get started. And then what you have 8,000 here and 1,500 here, which means this is 84%. It is basically 8,000 divided by 8,000 plus 1,500. So this one is 8,000 divided by 9,500. And then this one here is 16%. Then you do exactly the same for all the outflows. So what you do is you start here, cash paid to suppliers, cash paid to employees. You go down 1, 2, 3, 4, 5 items here. So you have 1 item, 2, 3, 4, 5 items here. Then you do the same here. You have 1 item here. 1, 2, 3, 4. So you have all those 9 outflow items here. If we start again, outflows, you have here minus 2,000, minus 2,000, minus 150, minus 500, minus 1,000, minus 2,500, minus 1,200, minus 800, and minus 1,500. So you have all those items. In total, This is 13,000. Here the total was 9,500. And then what you do again, this one divided by this one divided by this one divided by this, then you get all the percentages, 15, 15, 12, 4, 8, 19, 9, 6, and 12. And if you've done it correctly, then you have 100% here. Yeah. Yeah, so really every inflow item expressed as percentage of total inflow and each outflow item expressed percentage of total outflow. If you have a cash flow statement in the indirect format, then you would start with CFO right away. Because indirect format, you know, we start with net income, we do non-cash adjustments such as depreciation and amortization, and then we would look at net working capital adjustments. So what you do, you leave this out, you would start directly with CFO. So what you would do under the, if you have a cash flow statement in the indirect format, what you would do, you would not have this item here. You would directly use the CFO item, which is 1,000 here, 1,000 here, CFO, 2,500, then you would do the same. And what you would do, you would also not have this item, this item, this item, this item, and this 1, 2, 3, 4, 5. You wouldn't have those. So 1, 2, 3, 4, 5. You would only have, under the outflow section, you would only have this one, this one, this one, this one, because for CFI and CFF there is only the direct format. Yeah, so some adjustment, but the approach is the same. This is how you do cash flow statement. Common size, I will explain in another video how we express each line item as a percentage of net revenue. I hope you found this useful. Thanks so much. Bye.